Some people have given up on crypto, for now, pivoted AI or gold. Some are just waving, see you in 2027. Depending on when you watch this, crypto might be pumping or puking. The price swings keep changing, but the feeling underneath is the same. Your portfolio still doesn't look like you hoped it would. From where I sit, most people seem just exhausted. The problem isn't that crypto is screwed, it's that the shape of crypto has changed under our feet. While most retail portfolios contracted or round-tripped, a boring structural giant has been building in the background. In the last year, more than $9 trillion in stablecoins moved across crypto rails. That's 5 times PayPal's volume. And the pattern in that data actually suggests a huge chunk of that isn't just from speculative traders. Contrary to popular belief, it's dollars being used and parked, moved and settled in crypto. That's the kind of behavior institutions pay attention to, while most retail only watches Bitcoin or altcoin price action. If your altcoin playbook feels broken, it's because it is. Most people are still trying to read a 2025 market with the 2021 mental model. But if you're still watching crypto videos in this kind of environment, you're probably not in the crypto is dead camp. You care enough to stay through the pain. You just need a new map, one that actually fits the market we're in, not the cycle you wish we were in. In this video, I want to show you what is actually dying in this altcoin market, what is quietly growing under the surface, and how to adapt to the signals that matter if you want to be positioned for the next phase of this market. If that sounds helpful, hit the like button so YouTube knows you want more analysis and less BS. Hi, I'm Anna. I'm a crypto investor building my self-sovereign stash. I have been surviving this crypto cycle that has crushed so many for a few simple reasons. I built my own strategy, wrote down the rules, and stuck to them. I never used leverage. I refused to buy large sizes of altcoins during the bull market. I allowed myself smaller size trades only. Instead, I took profit from my altcoins that I bought in the bear market. And I never sell my Bitcoin. And that's it. Before I go further, a quick disclaimer. This is not financial or investment advice or a recommendation to buy or sell any asset. I'm sharing my personal views and what I do with my own money for general information and entertainment only, not taking into account your individual circumstances. I can't guarantee any level of success and I make no financial claims. Your outcomes will depend on your own decisions, skills, and market conditions. So always do your own research and never invest money you can't afford to lose. Right, let's start with the day it felt like crypto really did die for a lot of people. October 10. On that day, we saw one of the biggest liquidation waves of this cycle. The Trump tariff news, or MSCI, may have lit the match, but a huge chunk of that move was mechanical. Margin calls, auto-deleveraging, and risk systems dumping into thin liquidity, which always hits altcoins harder than Bitcoin. So, if you lived through October 10 and thought, okay, that's it, this whole space is finished, what you were really feeling was a structural stress test of a very fragile market, but not the death of the entire crypto experiment. But here's the key part. October was gasoline on a fire that was already burning. The deeper problem started long before that. Let me explain. Broadly, there are 2 ways a crypto market really dies. 1, belief collapses. 2, something important breaks structurally. Right now, it appears we may have a painful mix of both on the altcoin side of the market. Belief has drained out of a lot of retail. People have been punished for 2 years when they expected to be rich. So they're far less willing to give tokens, teams, or influencers the benefit of the doubt. Their appetite for risk has changed. Cycles of hope and trauma reshape behavior. You see that in the way people are tweeting. You see it in the rotating villain of the week. You see it in the way altcoin investors unfollow the influencers who led them into bad trades, because those influencers were making predictions, not teaching process. But belief collapse isn't the whole story. Part of the crypto market actually did suffer structural breakdowns over a longer time period, not the core technology or base networks, but the business models and incentives behind thousands of altcoins. Here's what I mean. Too many tokens promised utility they couldn't deliver. Too many teams confused speculation for product market fit. Too many ecosystems were built on unsustainable emissions and inflation. Too many retail investors thought they were early stage VCs without understanding risk or dilution or project team runway or token unlock schedules. See this video if you want to understand my point on all that in more depth. Ultimately, too many projects depended on fresh retail liquidity that never turned up in size. That's the structural break. It was the business model of launching unproven experiments with billion-dollar valuations. The old model of non-stop token launches without enough real adoption has been collapsing under its own weight. In 2021, everything pumped. In 2025, almost nothing does. Not for long anyways. That mechanism has finally essentially broken because retail is tired of paying for potential that hasn't turned into profit. The retail casino version of crypto has entered a kind of hibernation through wealth extraction exhaustion, at least for now. With fewer random face-melting pumps, that means the market has been less forgiving than it was in earlier cycles. Without the outsized green candles like we used to have, bad entries and oversized positions will hurt your portfolio much more and take longer to fix. That's why investing rules matter. That discipline is what I want to teach you, not shill you a different altcoin every week. Not make Bitcoin cycle or when altcoin season prophecy every other day. Systems-based thinking, strategies, risk management practices, sense-making of this complicated technical, political, and financial space, because this is what many people are missing. Your crypto portfolio pain is not crypto market death. It doesn't mean there is anything wrong with the broader crypto system underneath at all. And to see that clearly, you have to look at what's actually growing. The noisy, speculative side of crypto has been contracting. The boring, structural side of all of crypto is still expanding. Let's start with the biggest blind spot in the entire industry right now for most retail investors: stablecoin activity. Check out the data in A16Z's State of Crypto 2025 report. Stablecoins have more than 5 times the transaction volume than PayPal and more than half of Visa's. And that's based on adjusted data that filters out a lot of obvious spam and fake volume. In other words, this isn't just casino churn. It's accelerating organic use of crypto rails to move and park real dollars. Not meme coins, not leverage casinos, plain US dollars in their digital form, moving across crypto rails, 24 hours a day across global borders. This is not crypto dying. This is crypto quietly sucking in the global financial system while only those in the know are watching. Most people don't have a clue. The United States is actively turning the US dollar into software. Every major institution is building toward the same direction: the tokenization of everything, with digital dollars as software objects moving across crypto technology rails. Crypto is not fringe anymore. It is official US government policy. Tokenization is simply this: every asset you know today, property, bonds, credit, cash, equity in companies, funds, indexes, loyalty points and in-game items, intellectual property and data streams, even things like concert tickets or a slice of a social media creator's future income. All of it will become programmable, fractional, and transferable across global crypto networks that settle instantly. This is just the next chapter of a story you already know. First, we digitized our music, then our photos, then our maps and our social lives. Now we are digitizing the balance sheet of the entire world. When the US went off the gold standard in the 1970s, it quietly rewired how money worked for everyone, even if most people didn't understand it at all at the time. We are living through a shift that big again. And at the center of that rewrite sits the US dollar again. It's being turned into code through stablecoins and tokenized assets. And this isn't just for humans. AI agents are coming, and they won't have bank accounts. They will use these crypto rails to pay each other instantly. That is the next monetary empire. It's not physical, it's digital. And whether we like it or not, this is becoming a form of digital dollar colonization, not the old military or political kind, but a monetary one exported through software rails. For the first time in history, the US doesn't need to build bases or treaties to spread its currency. It just needs you and the rest of the world to adopt their stablecoins, which you'll be doing whether you realize it or not. Because if the US banking system is adopting them, which it is, do we really think the rest of the world won't be using them soon after? My bet is yes, even if it's only on the back end and not front-facing to consumers. And then there is the emerging market story. People in the West mistakenly think crypto adoption is dead because crypto prices are down. Meanwhile, people in places like India or Argentina are already using dollar stablecoins every day to move money and protect their savings. They're using crypto to survive. Because their local money sucks. Their banks fail them. They aren't speculating on altcoins, they're using crypto to escape their local fiat system. So they're leapfrogging technologies, like they leapfrogged laptops and went straight to mobile. They're skipping bank accounts and going straight to crypto. Meanwhile, retail investors in the US, UK, Australia, and similar places think that if Solana or Ethereum is down 50%, adoption must be dead and it's all a bubble. No. Crypto is growing fastest where money and the banking system are failing humans the most, which brings us to what actually matters now. This is the part most people will ignore. Crypto's not over, but the version of crypto that survives the next decade may be different from the altcoin casino version that dominated the last one. If you want to survive and grow your wealth, here is what you must adapt to. First, no expert or influencer can save you. No expert or influencer knows the future. They also don't know what price you entered the crypto market. They don't know your personality or your true risk tolerance. They don't know how your portfolio is constructed. Only you can build the risk management strategy you actually stick to. I remember I was selling some altcoins in September while my friend was buying them. Neither of us did anything the wrong way. Our timeframes are different and our portfolio strategies are different. If you want help designing your own strategy, that is exactly what this channel is for. I have a whole library of videos breaking down my systems to give you new ideas to design your own system. So check some of those out after this one. Second, you need to stop treating crypto like a casino and start watching the infrastructure rails be built and get involved there. Here's my investment thesis. You don't get rich holding the digital dollars. You catch the asymmetric upside by owning the ecosystem that the dollars flow through. This leaves you two targets: the base layers, which act like toll roads taxing the traffic, or the applications on top, which act like shops capturing the actual commerce. The market is still debating which layer will capture the most value, but where we're heading, digital dollars seem to be becoming one of the main liquidity engines for fueling both the base layers and the apps built on top. So I believe the real signals are not price pumps or dumps of altcoins. That's mostly noise for now. The signal is where the stablecoins are flowing. You can literally see where the digital dollars are going by tracking stablecoin charts on platforms like DeFi Llama. If you want a simple checklist, start with asking these questions. Is more stablecoin value moving into or out of this chain or app over time? Is real value actually settling here, not just trading and speculation? And which stablecoins are dominating and where and why? The so-called experts won't tell you the best opportunities in crypto in advance. They'll do what they always do, tell you the story after they've already filled their bags. Some only start talking once they're ready to sell into the hype. That's why you must act self-sovereign. You design the strategy, not them. Third, you need to survive long enough to catch these asymmetric opportunities. Crypto is volatile, and my belief is the best opportunities rarely appear in the bull. They appear in the bear market, when belief is gone and everything looks pointless, when only the stubborn and the curious remain. People think I'm joking or that I'm cruel when I say this, but I'm not. Bear markets make me excited. They're my favorite time. It's less risky in a bear market than a bull market for me. Let me be transparent about how I see this space because it matters for the point I'm about to make. I'm part sound money maxi. I believe in global, geopolitically neutral, decentralized, scarce, self-custodied money that can't be printed or politicized. But I'm part disruptive tech maxi too, especially around AI plus crypto infrastructure and applications, because I believe some of the biggest future opportunities may sit outside the sound money layer of crypto. And I'm also a price sensitive investor. I only take on real size in altcoins when things are absurdly cheap and bearish and everyone else is running for the exits. Now, those different parts of me are not contradictions, they're my edge. And if you don't know which parts of you are driving your decisions, the market may decide them for you. Fourth, you need to understand what crypto actually is now and what game you're playing in it. Crypto is part freedom tech and infrastructure, part new financial system and technology rails, part global settlement layer, part AI infrastructure, part sound money movement, part early stage venture. You need to clearly understand that crypto is not one thing. It is a mixed asset class. If you try to cram it into a single box, just tech stocks, just money, just a casino, you will always be confused, which is why altcoin casino pain doesn't equal crypto system death. Once you see the different parts, you can decide which game you're interested in playing, which signals are important to your strategy, and ignore the rest. And this is where it loops back to everything we've talked about. The US is turning their dollar into crypto software, and institutions are quietly rebuilding their financial infrastructure using crypto. And they're not building on your meme coins. Not yet anyways. This will reshape the crypto market as you knew it. I'm here to watch that and place my asymmetric bets. Bets I prefer to make when everyone else has given up hope. If this brought you a bit more clarity in the chaos, make sure you're subscribed and like the video to poke YouTube into action. If you want to understand how these new rails connect to liquidity and the 4-year Bitcoin cycle, watch my video here next. I break down the different cycle theories and the trap a lot of investors are walking into. Alright, that's it for me. This is Sovereign Stash. I'm Anna. Remember, ownership first, freedom follows. Thanks for watching. And maybe share this video with someone who keeps saying crypto's over. See you in the next video.